Welcome to the deep dive. Get ready because we're about to plunge into a really high stakes battle that's redefining, well, the plumbing of the AI revolution. We're talking high speed networking, specifically centered around two giants, Arista Networks, ticker ANET, and Nvidia, ticker NVDA.
That's right. For years, Arista has been a dominant force in the data centers powering the biggest cloud companies. But Nvidia, the king of the AI chip, just fired a major shot, like directly into Arista's core market.
Yeah.
Our mission today is to unpack the stack of sources you shared, the articles, the research, the notes, to understand what this challenge really means, where Arista stands, and what you absolutely need to watch for as this fight unfolds.
And the moment this battle just dramatically escalated was May 29th, 2025. That's when Nvidia made a bombshell announcement. Meta Platforms and Google, two of Arista's most critical, long-standing customers, are adopting Nvidia's Ethernet network switches. This isn't a small thing. It's a direct intrusion into Arista's most valuable territory. And the market reaction was swift and pretty brutal for Arista's stock that day.
Oh yeah, it was a wake-up call, immediately forcing investors to reevaluate just how secure Arista's position is with those crucial cloud and AI titans.
So let's start with where Arista was standing before that shot was fired. What did the sources tell us about their position, their financial health heading into this?
Well, Arista's built its reputation as a leader in high-performance, data-driven networking, particularly strong in the 100 gigabit Ethernet space. And they've been rapidly gaining traction in 200 and 400 gigabit networks. Their focus has been the demanding needs of large AI clusters, massive data centers, and increasingly enterprise campuses and routing infrastructure.
And their customer base, it reads like a who's who of the internet economy.
Absolutely. They serve 7 out of the top 10 U.S. hyperscalers. We're talking companies like Microsoft Azure and critically Meta Platforms. Their leadership is widely recognized. The 2025 Gartner Magic Quadrant for data center switching placed them firmly in the leaders quadrant, specifically highlighting their highest ability to execute.
Okay, let's look at the numbers. Their most recent quarter, Q1 2025. Because these financials show a company that was, on paper, incredibly strong just before this competitive shift became so public.
They were indeed. Q1 was robust. Arista reported revenue just over $2 billion. $2.005 billion, up nearly 28% year over year. That was the first time they'd crossed the $2 billion quarterly mark, driven by strong demand from those cloud titans, but also, surprisingly solid performance outside of that core group.
And profitability was really impressive, too.
Exceptionally so. Non-GAAP earnings per share were 30% jump year over year, beating analyst estimates. Gross margins were fat at 64.1%, helped by supply chain stability and their customer mix. Operating margins were also very healthy, just shy of 48%. Their non-GAAP net income topped $826 million for the quarter.
So financially solid ground. What about the balance sheet?
Rock solid. As of March 31st, they were sitting on over $8.1 billion in cash and investments. And here's the really notable part. 0 long-term debt. It's a massive strength, right? Gives them flexibility. They also generated over $640 million in cash flow from operations in Q1.
0 debt in this kind of growth industry. Yeah, that's quite something. And they were channeling some of that cash into share buybacks, right?
A significant amount. They repurchased $787 million worth of stock in Q1, their largest ever, and authorized another $1.5 billion in May. On one hand, this signals management's confidence, definitely. On the other, though, in light of the Nvidia challenge, it kind of raises a question. Is returning capital the best use of funds compared to, say, potentially aggressive R&D or acquisitions needed to fight a competitor like Nvidia?
Let's talk about the stock's performance leading up to that May 29th news. We know it dropped that day, closed down 5.8% at $87.41. But what was the picture before that?
Yeah, the stock had already been under some pressure, actually. Year to date, down somewhere between 12% and 70% even before May 29th. Suggesting the market might have already been factoring in some headwinds or, grappling with its relatively high valuation. Its trailing PE was around 39 times earnings, clearly placing it in growth stock territory, higher than the broader market or many peers, though maybe a bit below the average tech sector valuation. The Nvidia news acted as a potent catalyst, kind of validating those potential concerns and prompting that sharp immediate reaction.
You mentioned diversification beyond the cloud giants. Where else is Arista focusing?
This is a crucial part of their strategy, yeah. They're putting significant effort into the enterprise sector, and particularly campus networking thing, wiring up offices, universities, hospitals. Their CEO talks about strong momentum there. They've developed these cognitive campus solutions designed to handle the needs of modern campuses, supporting things like power over Ethernet, PoE, and the latest Wi-Fi standards.
And they're actually seeing wins there.
Yes. Q1 brought notable examples, like a campus deal with a federal agency, expanding a partnership with a tech firm into the campus space, and a deal with a Web 3.0 company.
How big is this segment for them right now, roughly?
Enterprise campus and routing accounts for about 20–25% of the revenue. They've set a target to reach $750 million, specifically in campus networking revenue in 2025.
And this is part of their whole Arista 2.0 strategy.
Exactly. It's about expanding their reach beyond their core data center strength, investing in software as a service for, stickier revenue, and growing these adjacent markets to diversify their business.
But compared to that Cloud AI Titan segment, which is almost half their revenue, around 48%.
That's the core challenge right there. While promising, the diversification segments are still relatively small. They need to accelerate substantially to truly offset the risk of any significant slowdown or market share loss in that dominant cloud business, especially now with Nvidia aggressively targeting it.
And going back to that buybacks versus R&D question, with Nvidia now actively competing, doesn't that $8 billion cash pile and how they use it become even more critical?
Absolutely. That cash gives them firepower, serious firepower. The question becomes how they balance returning value to shareholders through buybacks against the need to invest aggressively in R&D, maybe accelerate product roadmaps, and potentially pursue strategic acquisitions to defend their turf against a vertically integrated competitor like Nvidia.
Okay, let's shift focus. The new kid on the block in this specific market, Nvidia. What exactly is their offensive here, and what is this Spectrum X thing?
Well, what's fascinating here is how direct this challenge is. Nvidia's move into Arista's core space was announced on May 29th. And the headline wasn't just a new product line, it was about who was buying it, Meta and Google. That makes it real, immediately.
And their weapon of choice is Spectrum X.
That's their platform. Nvidia is positioning Spectrum X as the world's first Ethernet fabric specifically built for AI. It's their answer to building the high-speed networks needed to connect, tens of thousands of GPUs in massive AI data centers.
And this fits into NVIDIA's broader strategy, presumably.
Perfectly. NVIDIA isn't just selling chips anymore. They're selling optimized solutions. They offer a comprehensive, full-stack approach. The market-leading GPUs, their own networking hardware switches, NICs, DPUs, and the software layer to manage it all. Their ability to bundle the entire stack. That's a potent advantage that Arista, being a pure-play networking company, simply cannot replicate.
So what are the key components of Spectrum X, then?
The platform combines their Spectrum Ethernet switches with their Bluefield Super NICs. NVIDIA claims that by tightly integrating these, they can deliver something like a 1.6 times performance enhancement for generative AI workloads compared to, traditional Ethernet.
Okay, 1.6x, where does that performance claim actually come from?
They're basically adapting technologies they perfected in their high-performance InfiniBand networks, things like advanced adaptive routing and congestion control. And they're bringing it to Ethernet, optimizing the network traffic, specifically for the chatty, interconnected nature of AI training jobs.
And they've also unveiled these really high-speed switches based on silicon photonics.
Yes, they revealed their next-generation photonic switches back in March. These things are designed for immense scale, offering incredible port density and total throughput numbers like 400 terabits per second total, with 1.6 terabits per second per port. It's massive. They claim this tech offers benefits beyond just raw speed, like better power efficiency and signal integrity over long distances, which is critical in these huge AI clusters.
And the Bluefield Super NICs and DPUs, they're part of this story too.
Absolutely vital. These are accelerator cards and plug into the servers alongside the GPUs. They're designed to offload the heavy network traffic burden from the CPU and even the GPU itself, letting the GPUs focus just on computation. The Bluefield 3 and ConnectX-8 Super NICs provide extremely high-speed connections up to 800 gigabits per second, engineered to accelerate that GPU-to-GPU communication, which powers distributed AI training.
And they wrap this all up in software.
Yep, they have NVIDIA Cumulus Linux, which is a network OS focused on automation, and tools like NVIDIA Air for simulation. It's all part of that integrated package.
Now, timing is crucial here, right? When are these most advanced photonics switches actually available?
This is a key detail. The highly advanced Spectrum X photonics Ethernet switches, they're slated for general release in 2026. Their InfiniBand versions, Quantum X Photonics, are expected a bit sooner, maybe late 2025.
Okay, 2026. So the bleeding-edge hardware is still, over a year out? But the May 29th announcement about Meta and Google adopting NVIDIA Ethernet switches, that means they're selling some Ethernet solutions now, right? They must be.
Precisely. The Meta-Google wins imply they're deploying currently available or maybe near-term Spectrum Ethernet hardware, not necessarily waiting for the 2026 photonics version. This means the competitive pressure is immediate. It's influencing hyperscalers' purchasing decisions right now, even with that 2026 window for the top-end stuff.
Nvidia also relies on partners, though.
They do. For instance, they work closely with TSMC on manufacturing the silicon photonics for their chips. And their deep engineering relationships with hyperscalers like Google and Meta are foundational. Involving collaboration on everything from GPUs to networking and software. Now, these collaborations extend to being significant customers for their new Ethernet offerings.
This integrated full-stack approach from Nvidia, it sounds powerful, but doesn't it kind of run counter to the typical hyperscaler preference, for open standards and multi-vendor strategies?
This is the core tension, absolutely, shaping this entire battle. Hyperscalers traditionally favor open ecosystems and multi-vendor approaches. Why? To prevent vendor lock-in, foster innovation, maintain negotiating power. They've invested heavily in software like Sonic or FBOS that runs on standard merchant silicon hardware from vendors like Arista. Replacing established Arista infrastructure with a potentially more proprietary Nvidia stack, even with promises of performance gains, involves significant operational upheaval and economic considerations for these companies. It's a fundamental clash between Nvidia's optimized vertical integration and the hyperscalers' desire for openness and, control.
And on the photonics front, Arista's CEO has been a bit cautious, hasn't she, about things like co-packaged optics?
Yes. She's noted that co-packaged optics, or CPO, where the optics are built right onto the switch chip package, it's still very early stage. High failure rates in prototypes, things like that. Arista believes alternative technologies like pluggable optics or maybe co-packaged copper might be more viable or offer similar benefits in the near term. While Nvidia is an early mover integrating silicon photonics into a switch, the broader industry, including Arista suppliers like Broadcom, is also advancing optical technologies. It's not just Nvidia.
So the Nvidia challenge isn't just theoretical, it has immediate market impact, even if their most advanced hardware is still maturing. Let's look at the impact on customers and the broader market dynamics.
Yeah, the Meta and Google wins were a jolt. As we saw, Arista stock dropped sharply around 6.9%, according to some reports, immediately after that May 29th announcement. It was so impactful because Meta, in particular, has historically been one of Arista's largest customers, really large. Sources like Citi analyst Atif Malik reported that these recent cloud customer acquisitions have helped push Nvidia's estimated Spectrum X sales run rate to an impressive $8 billion annually.
Wow, this news really exposed Arista's customer concentration risk, didn't it?
It absolutely brought it right to the forefront. With roughly 48% of Arista's revenue coming from just a handful of cloud and AI titans, any shift in spending or vendor preference by just one or two of them has a disproportionate impact. We saw a similar dynamic play out back in, 2019, 2020, when Meta's spending patterns changed. This Meta factor isn't just about revenue. It sends a signal to the entire industry about architectural choices.
But you mentioned hyperscalers are also pursuing diversification. Doesn't that help Arista in a way?
This is where it gets really interesting. Analysis from firms like Citi suggests that these hyperscalers are actively pursuing multi-vendor strategies for AI networking. Google is reportedly looking beyond a single vendor for their needs. Meta is evaluating various AI networking technologies and vendors, including both InfiniBand and Ethernet solutions from multiple providers. For Arista, this is a double-edged sword. It's a threat because it creates an opening for Nvidia, obviously. But it's an opportunity because it means hyperscalers are probably unlikely to commit exclusively to Nvidia's bundled solution.
So the critical uncertainty, the big question is, are these Nvidia wins small, targeted pilots, maybe proof of concepts, or are they the beginning of a fundamental shift in sourcing for core AI Ethernet fabrics?
That's the million-dollar question, or billion-dollar maybe. Investors and the industry are grappling with it. The answer will determine the scale of the impact on Arista.
Looking at the broader market, is the future of AI networking really moving towards Ethernet?
Definitely seems that way. While InfiniBand has historically been the standard for high-performance computing and initial AI clusters, Ethernet is rapidly gaining ground for large-scale AI data centers. Why? Mostly cost-effectiveness and its widespread deployment. The AI switch market is projected for massive growth, potentially hitting $29 billion by 2029, with the vast majority of that growth expected to be in Ethernet. Nvidia is pushing hard into this space with Spectrum X Ethernet, even leveraging components like Cisco's Silicon One in some collaborations. Arista, of course, has always been an Ethernet-centric company, primarily using Broadcom's merchant silicon.
Which brings us to the core debate. Performance versus, let's say, total cost of ownership and openness.
It's exactly. Nvidia claims its integrated Spectrum-X offers that 1.6 times better performance for generative AI than traditional Ethernet. Arista counters that their advanced switches, using the latest Broadcom chips like Tomahawk 6, combined with their sophisticated software features, especially their new cluster load balancing, CLB can achieve good enough performance for AI workloads. And crucially, they argue this comes at a significantly better total cost of ownership, or TCO, and provides the flexibility and openness that hyperscalers value, helping them avoid vendor lock-in.
So the argument isn't just about peak speed, but the overall economics and manageability in a real-world hyperscale AI environment.
Precisely. Arista argues that scale-out network efficiency saves money by maximizing the utilization of those incredibly expensive GPUs. Nvidia argues their tight integration and optimization delivers superior performance that justifies their approach. This is the fundamental competitive battlefield right here.
The idea that a growing AI Ethernet market benefits everyone seems logical, but your point about market share within that growth is key.
It is. The TAM, the total addressable market, is getting bigger, which is great. But if Nvidia captures a disproportionate share of the new AI cluster, builds the high-growth part of the market, then Arista's growth rate could slow down, even as the overall pie expands. Citi projects Arista to double its share in the Ethernet AI backend to nearly 20% by fiscal year 2025. Meeting or exceeding that target will be a critical indicator of how well they're fighting this battle.
How did analysts react specifically to the Nvidia news back in May?
Well, the immediate stock drop tells you the market's initial reaction was negative. Analysts' commentary was mixed, reflecting the complexity and uncertainty. Citi, despite the news, maintained a buy rating and a $112 target, arguing that the expanding Ethernet AI market still provides ample opportunity for Arista. They highlighted the hyperscaler diversification angle, and they reiterated their belief in Arista gaining share.
And New Street Research had a slightly different take.
Yes, Pierre Ferragu at New Street offered a more nuanced view. He suggested Arista could potentially benefit more from a broader market shift, away from InfiniBand, where Nvidia is dominant, towards Ethernet overall. Even if Nvidia gains some specific share within the AI Ethernet segment itself. This perspective implies the overall market transition might be a net positive for Arista, even if they face tougher direct competition from Nvidia on specific deals. Kind of interesting.
Other analysts pre-news were mixed as well, you mentioned.
Right. Morningstar, before the news, had a lower fair value of $82, seeing Arista as overvalued based on their model. But they did acknowledge Arista's history of winning against proprietary solutions. Just before the Nvidia news, Redburn Atlantic initiated coverage with a buy in a $112 target. Needham and Barclays also had buy overweight ratings, though some had slightly lower targets post-Q1 due to other factors like tariff concerns.
So, while the stock reacted sharply, the overall analyst consensus wasn't a sudden collapse to sell ratings or anything.
Correct. It points to the complexity, recognizing the threat, but also Arista's underlying strengths and the nuance of the market transition, and importantly, customer strategies.
Connecting this back to you, the listener, why does this hyperscaler diversification strategy matter so much?
Because it means Arista isn't necessarily losing all of Meta or Google's future AI networking business. That's key. But it does mean they are no longer the sole default provider for these critical customers. They have to compete head-to-head now, win deals based on the merits of their technology, their TCO argument, their software differentiation, and their openness versus NVIDIA's integrated approach. Their ability to win in these bake-offs against a formidable new competitor is now absolutely paramount.
Given this direct challenge, what is Arista's strategy? What are their defenses, their competitive moat?
Arista has several core strengths they're leaning on. The first is their software, particularly their operating system, ES.
Right, EOS is something they always emphasize. Always.
For good reason. It's considered highly reliable, programmable, and runs a single software image across all their hardware, which really simplifies operations for customers. It's battle-tested in the most demanding cloud environments, and Arista calls it a huge differentiation. And, they're probably right about that.
And their management platform, CloudVision.
CloudVision is key for centralized network management, automation, and getting visibility into what's happening across the network. Crucial for these large-scale deployments, they've specifically enhanced it with AI-powered features like CloudVision Universal Network Observability, or CVUNO, which provides proactive troubleshooting and AI job-specific visibility, helping customers understand how their AI workloads are performing on the network.
They also strongly advocate for open networking principles, which seems like a direct contrast.
Yes, and this is a direct contrast to NVIDIA's integrated approach. Arista champions open standards and supports running third-party network operating systems like Sonic on their hardware. This is a big draw for customers who prioritize flexibility and avoiding vendor lock-in, which is always a concern with proprietary solutions.
And they have a suite of products specifically for AI networking, Etherlink.
That's their Etherlink portfolio. It's designed for the specific demands of large AI clusters, focusing on efficient topologies and performance. A key feature within Etherlink and EOS is that cluster load balancing, or CLB, which is designed to optimize traffic distribution for those unique AI workload patterns, aiming to keep GPUs running at peak utilization. Very important.
They have a strong track record with high-speed hardware, too, obviously.
They do. They were leaders in 100G and have gained significant traction in 200G and 400G. Their roadmap includes the next-generation 800G and 1.6T switches, based on Broadcom's latest merchant silicon chips like Tomahawk and Jericho. They leverage that ecosystem well.
And their long-standing relationships with hyperscalers must count for something. Loyalty, trust.
Absolutely. They have deep ties with these customers, often seen as trusted engineering partners. This creates high switching costs. It's not easy or cheap to rip out and replace a network infrastructure that's deeply integrated into a company's operations, and it definitely builds loyalty.
But in the AI world, where NVIDIA claims raw performance is paramount, how does Arista's software differentiation like EOS and Cloud Vision stack up against NVIDIA's integrated hardware optimization? That's the crux, isn't it?
That's precisely what Arista has to prove. They're building AI-specific capabilities into EOS and Cloud Vision, like CLB and AI job observability in CVUNO, to demonstrate that their software makes the underlying hardware work better and more efficiently for AI workloads than a more basic network OS might. Even if NVIDIA's hardware has some inherent optimization, it's a battle of software-defined efficiency and flexibility versus tightly integrated hardware performance.
So their strategy is kind of dual-pronged on AI.
Correct. It's networking for AI, providing the high-performance hardware and software suite, Etherlink CLB, for AI clusters, and AI for networking, using AML within their software, like CVUNO, to automate, optimize, and secure the network itself. Arguing this makes their overall solution more robust for the demanding AI environment.
And they emphasize performance and efficiency, tying it back to GPU costs.
Yes. They argue that features like CLB are crucial because they directly improve GPU utilization. In a cluster with, millions, maybe billions of dollars of GPUs, making those expensive chips work more efficiently by optimizing the network saves customers money on compute time. That contributes to a better overall TCO. That's their argument.
They also seem prepared to coexist, not just dominate everything.
They position their solution as the premium blue box with EOS, sure. But they were prepared to support environments where customers might use white box hardware or run third-party OS like Sonic on Arista's own hardware, highlighting the quality and performance of their base hardware platform even then. It's a flexible approach.
And their stance on optics, where NVIDIA is pushing photonics so hard.
Arista maintains a more, let's say, optics-agnostic approach. They plan to support various technologies, pluggable optics, co-packaged copper, and CPO as they mature and become commercially viable. This contrasts with NVIDIA's earlier, more integrated push into photonics.
And they're explicit about wanting to be the network for any AI processor out there.
That's their stated goal, to be the premier and preferred scale-out network for all GPUs and AI accelerators, explicitly including those from NVIDIA. They want to be the best network to connect NVIDIA chips or AMD chips or Intel chips or whatever comes next.
So this is fundamentally a replay, isn't it? The historical battle between open ecosystems and integrated stacks, but with the massive scale and urgency of AI driving it.
Exactly. Yet, Arista champions the open, best-of-breed approach where customers can pick and choose components. NVIDIA promotes the integrated, optimized stack where everything works together supposedly seamlessly out of the box. While open systems often win long-term by fostering innovation and competition, the intense, immediate demands of AI could favor integration in the near term if it can genuinely offer significant speed-ups and simplification. Arista's challenge is proving that their open approach can meet or exceed the performance needs for AI workloads when you factor in the full picture: TCO, flexibility, manageability.
Are they investing heavily in R&D to fuel this defense? Do the numbers show that?
They are. R&D was over 10% of revenue in Q1. Notably, 60% of their 2025 R&D budget is specifically earmarked for AI-driven automation in quantum-resistant security areas directly relevant to the future demands of AI data centers. Their innovation is focused on Etherlink, their AI software suite, and delivering timely hardware based on merchant silicon. Their ability to quickly integrate the latest Broadcom chips, like hitting the 1.6T roadmap on time, is a key test of their model versus Nvidia's internal silicon development.
And that push for diversification outside of cloud titans, how vital is that now?
Oh, it's a vital strategic play. Absolute vital. To reduce their reliance on the segment now directly targeted by Nvidia. Expanding in enterprise and campus, reaching for that $750 million campus target, targeting verticals like financial services and government. These are concrete efforts to build alternative growth engines. And hopefully for them, soften the blow if the cloud segment faces pressure. Their growing software and services revenue, which is higher margin, is also part of this diversification effort.
So, those are Arista's defenses and strategies. What are the main areas of concern, the key risks facing Arista right now?
The absolute number one concern, which was, let's be honest, already there but is now acutely exposed, is that customer concentration risk.
And Nvidia's wins with Meta and Google just make that incredibly real?
Precisely. Nearly half their revenue comes from just a few titans. Nvidia gaining significant traction with any of them, especially Meta, who has been such a large customer historically, has a disproportionate impact on Arista's top line. And it sends a strong signal to the market.
What about pressure on their impressive margins? Could that change?
That's a major risk. Nvidia's entry, especially with a potentially bundled solution, could force Arista to compete more aggressively on price to win AI deals. Their historically healthy gross margins of around 64%. Well, they could face pressure if they have to offer discounts or if the mix shifts towards lower margin hardware in competitive battles. We've seen this happen in other parts of the networking market, right? It's a classic dynamic.
And just keeping up with the pace of change, execution.
Execution risk is high. The AI space moves incredibly fast, blindingly fast. Arista has to flawlessly execute on its roadmap, delivering those 1.6T switches, pushing out new software features like CLB, enhancing cloud vision they have to keep pace with, or ideally out-innovate Nvidia's vertically integrated development cycle. No room for error, really.
Are there broader economic or geopolitical factors at play here too?
Yes, those compound the competitive pressure. Any global economic slowdown could lead to reduced IT spending or longer sales cycles. Geopolitical tensions and trade tariffs, particularly U.S.-China tariffs, remain a potential headwind that could impact margins by maybe 1 toward 1.5%. That just adds to pricing pressure from competition.
Nvidia's ability to bundle GPUs, networking, and software. That just seems like a really tough hurdle to overcome for a pure play.
It's a significant strategic advantage, no doubt. For customers prioritizing simplicity and maybe a single point of contact for their AI infrastructure, Nvidia's integrated package is very compelling. It simplifies procurement and might offer a perceived performance or cost benefit that Arista, as a pure-play networking company, struggles to match alone.
And their inventory levels, you mentioned they are quite high.
They are, around $2 billion in finished goods. Part of that was deliberate, a strategic buffer against supply chain issues and pre-buying for tariffs. But it ties up capital and carries a risk of obsolescence in a fast-evolving market if demand shifts or new products arrive unexpectedly quickly.
So the core competitive battleground is really down to this. Can Arista convince customers that their open Ethernet approach, with its claimed TCO and flexibility benefits, is superior for complex AI workloads, compared to Nvidia's AI-optimized, tightly integrated, potentially higher performance, but more proprietary bundled stack?
Exactly. That sums it up. The risk is that Nvidia successfully redefines what optimal AI networking means, potentially marginalizing Arista if Arista can't compellingly demonstrate its value proposition specifically for these demanding AI environments.
Okay, let's try and bring all of this together. A comprehensive picture and an outlook. How do these two companies stack up specifically in this AI networking fight?
Okay, if we synthesize it, Arista's strengths are their deeply trusted, mature software platform EOS, their focus on software differentiation, their championship of open standards, their strong base in enterprise, deep customer relationships, their agility leveraging merchant silicon, and their growing diversification. Lots of strengths. Nvidia's strengths are their absolute dominance in GPUs, their ability to offer that full-stack integrated solution, their powerful AI brand, massive R&D machine, direct relationships at the highest levels with AI pioneers, and a leading-edge photonics roadmap. Also very strong.
And their weaknesses in the specific fight.
Arista's key weaknesses are the lack of a compute offering, making that bundling impossible, their high customer concentration, which is now directly under attack, and maybe being relatively newer to developing AI-specific networking software features compared to Nvidia's core focus. Nvidia's weaknesses in Ethernet specifically. Well, their relative newness to high-scale Ethernet switching compared to Arista's decades of experience, the fact that their most advanced photonic switches are still a year out, potential customer resistance to deep vendor lock-in, and their Cumulus Linux OS perhaps being less mature for general networking compared to EOS.
This really does come down to that battle for the second socket, doesn't it? That phrase seems apt.
It really does. Nvidia controls the first socket, the GPU. The networking becomes the crucial second socket. Hyperscalers, inherently wary of putting all their eggs in one basket, might strongly prefer a robust, open alternative like Arista for networking, even when using Nvidia GPUs. Arista's argument is they are the premier, best-of-breed, open networking solution that can perfectly complement any vendor's AI processor.
How does the stock valuation look now after the news and the drop?
Post-May 29th, Arista's stock is trading around $87, with a trailing PE still around 39 times. It's clearly priced as a growth stock. Less than the average tech sector PE, but higher than the general market and most networking peers. Morningstar's fair value estimate of $82 pre-news suggested it was maybe overvalued even before the drop. The recent decline reflects the market's concern, absolutely, but there could be further pressure if the impact on Arista's actual business materializes. A critical point for investors, I think, is the potential for valuation multiple compression. If the market perceives higher competitive risk and less certain future growth in their core profitable segment, investors might demand a lower multiple, limiting the stock's upside even if Arista continues to perform well in other areas.
What are the long-term growth prospects now? Factoring in this new dynamic, what do they hinge on?
They hinge on several key factors. Can Arista successfully defend its existing share and win new deals for AI networking with the cloud titans against Nvidia's full-stack push? That's number one. How fast can their enterprise and campus diversification truly scale to become a meaningful portion of revenue? Can their software differentiation, particularly those AI-specific features, be a strong enough competitive advantage? How much does the overall AI Ethernet market expand? And crucially, what percentage of that expansion does Arista capture versus Nvidia and others? And ultimately, how committed will hyperscalers remain to a multi-vendor strategy for AI Ethernet? Big questions.
Arista management has been quite bullish on growth, though, haven't they?
They have. They've mentioned reaching $10 billion in revenue, potentially sooner than expected. They specifically target $750 million in AI front-end revenue for 2025. And Citi analysts project a similar $750 million for the AI backend, the core AI cluster network, in FY25. The estimated total addressable market is huge. Arista sees data center, AI, and campus hitting $70 billion by 2028, and estimates for the AI switch market alone are up to $29 billion by 2029. The opportunity is vast, no question, but the competition for that opportunity is now significantly more intense.
And that brings back the longer-term question. In an AI world where compute and networking are increasingly intertwined, can a pure-play networking company like Arista maintain its leadership against a vertically integrated giant like Nvidia?
That's the central strategic question, isn't it? Arista must continuously prove that its specialized focus, software innovation, and open approach deliver performance, TCO, and flexibility benefits that genuinely outweigh the potential simplicity and perceived optimization of Nvidia's one-stop shop. It's a tall order.
So, bringing it all together, what's the actionable takeaway? The investment recommendation, maybe? And what should our listener watch for going forward?
Okay, based on balancing Arista's strong fundamentals, its proven technology, solid balance sheet, and strategic diversification efforts, against the very real and immediate competitive threat posed by Nvidia's direct entry and bundled solutions. The recommendation right now, I think, is HLD.
A hold. Okay, why not a buy or a sell?
Well, it's not a sell because Arista isn't fundamentally broken. They are a high-quality company with financial strength, technological leadership in their core areas, and credible strategies for diversification. They have the resources to fight this battle. But it's not a buy because the new competitive landscape has introduced significant uncertainty and execution risk, specifically in their most profitable and highest growth segment, AI networking with the Titans. The valuation, while lower than its peak, is still high for a company facing this level of direct, frankly existential competition from a player like Nvidia. We need more clarity on how this fight actually unfolds on the ground.
What are the specific things our listeners should watch for? Things that could change this picture, positive or negative.
Okay, look for these potential positive catalysts. Watch if Arista starts announcing significant new AI networking wins with major cloud titans or enterprises, specifically winning deals head-to-head against Nvidia. That would be huge. See if their enterprise and campus segments show truly strong acceleration that meaningfully offsets potential cloud slowdown. Monitor the timely and successful rollout and adoption of Arista's 1.6T switches and their AI software features like CLB. Listen for clear signals from hyperscalers explicitly stating their continued commitment to multi-vendor AI Ethernet, with Arista retaining substantial share. And look for any credible, real-world performance or TCO comparisons that show Arista's solutions stacking up well against Nvidia's bundle. On the negative side, watch for more announcements of Nvidia gaining significant share with Arista's key customers, Microsoft, Google, or especially Meta. Look for any delays in Arista's product roadmap. Track if Arista's gross or operating margins start to erode consistently due to competitive pricing. See if growth in the cloud segment slows significantly and isn't offset by diversification. And critically, observe if hyperscalers show increasing preference for Nvidia's full-stack solution due to simplicity or perceived optimization, reducing Arista's role.
And the key metrics to track quarterly, just quickly.
Yeah, keep an eye on Arista's revenue breakdown. Specifically, look at growth trends in the cloud AI segment versus enterprise and campus. Monitor their gross and operating margins closely. Look for any available market share data in high-speed AI Ethernet, although that can be tricky. Pay attention to customer commentary on earnings calls, particularly from Meta, Google, and Microsoft, regarding their networking infrastructure decisions and vendor relationships. And watch Nvidia's announcements closely for updates on their Spectrum-X deployments and roadmap execution.
So ultimately, this is much more than just a corporate rivalry between ANET and Nvidia.
Oh, it is. Much more. It's a battle over the fundamental architecture of the data centers powering the future of AI. The choice between an open, flexible ecosystem built on best-of-breed components versus a tightly integrated, potentially optimized stack controlled by a single vendor. Big implications.
Arista is a strong company, no doubt, with a lot of advantages, but the competitive landscape has fundamentally and dramatically shifted.
Agreed. Their dominance in a key segment is now squarely challenged. There's no other way to put it.
So here's a final thought for you to consider as you follow this story. As AI infrastructure continues to evolve at, well, breakneck speed, will the proven long-term benefits of an open networking ecosystem, things like flexibility, better TCO, avoiding vendor lock-in, will those eventually win out over the perceived simplicity and tight integration offered by a full-stack approach?
That is the multi-billion-dollar question indeed. Keep watching closely to see how these giants build the networks of tomorrow.
That's all for this deep dive. Thanks for joining us.